Hi everyone, welcome back to Corporate Decoder, the place where we decode the hidden meanings in financial reports, but beware, this one has some juicy tidbits that might just surprise you. Today we're diving into a report from Ares Core Infrastructure Fund, a company that's been busy making moves in the infrastructure space, and it looks like they've been quite active raising capital and distributing some cash to investors. This report specifically hones in on late July and August of 2025, giving us a snapshot of their recent activities. Let's get straight to the action here. Ares Core Infrastructure Fund sold a significant chunk of its Class I common shares. We're talking about 51,449,209 shares being sold for a total of $1.2848 billion. That's a massive amount of money, demonstrating a strong appetite from investors for what this fund is offering. Specifically on August 1st, 2025, they sold over 4.4 million Class I shares for $110 million. The final number of shares and the price per share were locked in on August 20th. Now here's the important part. The price per share was tied directly to the fund's net asset value, or NAV per share, as of July 31st. This means investors paid exactly what the shares were worth at that specific time based on the fund's underlying assets. This isn't some arbitrary pricing, it's a direct reflection of the fund's holdings. And speaking of net asset value, let's look at those numbers. As of July 31st, 2025, the net asset value per Class I common share was a rather precise $24.85. Now that might sound like a small number, but when you multiply that by millions of shares, it adds up. The fund's overall net asset value as of the same date was about $1.1766 billion. But here's a more interesting figure. The fair value of their entire investment portfolio was even higher at $1.3426 billion. This difference between net asset value and fair value can sometimes indicate how the market perceives the fund's assets versus their book value. Now let's break down where their money is actually invested as of July 31st. The fund's portfolio is heavily weighted towards common equity, making up 62.49% of their investments. This means they're directly investing in the ownership of other companies. Then you have other equity investments sitting at 25.78%. And finally, first lien senior secured loans, which are essentially debts where the fund is the primary lender and gets paid back first in case of issues, account for 11.73%. Let's dig a little deeper into these equity investments. The common equity part is tied to 9 projects spread across major US power grid regions like PJM and ERCOT. What's really noteworthy is that 89% of this is solar, with 11% being co-located battery storage. This shows a clear focus on renewable energy infrastructure. And the other equity investment involves 15 projects across similar regions, but with a slightly more diversified renewable mix. Here, 53% is solar, 25% is wind, and 22% is battery storage. This broader approach to renewables suggests a strategy to capture different segments of the clean energy market. Now, for something that directly impacts investors, the distributions. The fund announced regular monthly distributions for the second half of 2025. For their Class I shares, a share class with no management or distribution fees, they're paying out 21 cents 10 per share for July, August, and September, and then a slightly lower 20 cents 83 per share for October, November, and December. It's important to note that while other share classes like Class DN and S are mentioned, there are currently no shares outstanding for those classes. So all the distribution action seems to be focused on Class I shares at this moment. These distributions are paid either in cash or reinvested back into the fund for shareholders already participating in the reinvestment plan. Looking at the entire picture, Ares Core Infrastructure Fund is clearly executing a well-defined strategy. They are actively raising capital from investors by selling their Class I shares, which are priced directly off their portfolio's net asset value. Their investments are heavily concentrated in renewable energy projects, primarily solar and battery storage across various US power markets. The consistent monthly distributions signal a commitment to returning value to shareholders. In terms of overall performance, the fund has successfully raised a significant amount of capital with over $1.28 billion in Class I shares issued. This indicates strong investor confidence. Their investment strategy focusing on renewables aligns with current market trends and government initiatives supporting clean energy. This is a positive sign for future growth and stability. The fund's portfolio allocation shows a bold bet on common equity in the renewable sector, which by definition carries some risk, but also offers substantial reward potential if these projects perform as expected. The inclusion of senior secured loans provides a bit of a hedge, offering more stable income streams. So what's my take on all this? Ares Core Infrastructure Fund appears to be charting a steady course in a growing sector. Their ability to attract substantial investment dollars and their clear focus on renewable energy infrastructure are definite strengths. The pricing of their shares directly to NAV also suggests a transparent approach to investor relations. However, like any investment, especially in infrastructure, there are always risks. The success of this fund is tied to the performance of its underlying energy projects, which are subject to regulatory changes, energy price fluctuations, and operational challenges, the concentration in specific regions and technologies, while a strength could also be a vulnerability if those markets face unforeseen downturns. But for now, the story is one of growth capital raising and a strong commitment to the renewable energy transition. They are not just investing in infrastructure, there are always risks. The success of this fund is tied to the performance of its underlying energy projects, which are subject to regulatory changes, energy price fluctuations, and operational challenges, the concentration in specific regions and technologies, while a strength could also be a vulnerability. Alright, that's our deep dive into the Ares Core Infrastructure Fund's latest filing. What do you think about their strategy and their focus on renewables? Let me know your thoughts in the comments below. If you found this breakdown helpful, give this video a thumbs up and make sure to subscribe for more corporate financial decoding. And don't forget to join our growing community over on Discord. The link is in the description. Thanks for watching, and I'll see you in the next one.